Solana and XRP are about to land their own Wall Street ETFs, and that single step could send the entire crypto world into a huge fast forward. I'm Brett at CryptoGX, and in this video, we'll check how BlackRock is making moves, why Ripple just won big in court, how Solana's network is exploding, what earlier Bitcoin and Ethereum ETFs taught us, how Solana and XRP really work, and why new ETFs could push prices up and spread crypto everywhere. So let's kick things off with BlackRock, the giant with $10 trillion under their mattress. BlackRock's spot Bitcoin fund called IBIT has already sucked in over $41 billion and just notched a 19-day streak of fresh cash. This proves that hedge funds, pensions, and even Grandpa's 401k trust BlackRock to open the crypto door. Now, insiders say BlackRock is not stopping. Not stopping at Bitcoin, not stopping at Ethereum. ETF guru Nate Gerasi and researcher Andrew Parrish both report that a Solana filing could drop any day now, with an XRP ETF close behind once Ripple's court dust settles. BlackRock executives even told Parrish, quote, "We might not be first, but we'll give clients choices," hinting that they plan to cover every top altcoin before their rivals do. Traders call this the IBIT effect. Once BlackRock launches, liquidity follows, and headlines keep the party roaring on after that. If the same money hose pivots towards Solana and XRP, their limited supply plus Wall Street's very deep pockets could light the next rocket when it comes to crypto. And talking about doors opening, Ripple just kicked down a giant one for XRP. In March, the United States Security and Exchange Commission, otherwise known as the SEC, dropped its very long fight against Ripple and XRP, stating that XRP sold on public exchanges is not a security. This is a big fight that Ripple and XRP have been going through for a long time now, and it's a big deal because it kind of opens the floodgates for people to put confidence into XRP. From this article on Reuters, Ripple will actually pay a smaller $50 million fine and move on, ending 4 years of courtroom drama. It was planned to be much more than that, so this is actually good news. That ruling is huge because clear rules in general invite lots of big money and more investors, especially on the Wall Street side of things. Only 5 weeks later, Cboe's BZX exchange filed to list 21 shares core XRP trust. I know that was a big old mouthful. Cboe is an entity with the BZX exchange, and 21 shares is kind of an entity that's planning to list an XRP ETF. So this is going to be the first spot XRP ETF on record. The filing says that the fund will hold real XRP, just like BlackRock's Bitcoin ETF. This also holds real Bitcoin. ETFs in general just mean an exchange traded fund, similar to how a stock, you can just buy it based on the ticker symbol, and you don't actually have to hold Bitcoin or XRP. The company or fund is going to hold it for you. With the legal fog gone, analysts and investors can expect more big names, big funds to join, like Bitwise, Franklin, obviously BlackRock, and all of these other entities to jump in next. But why the hurry? Well, because a green light from regulators plus really fresh ETF demand can spark a supply squeeze. Now, a supply squeeze, just to simplify, means that there's not enough supply for the demand that's out there. XRP's fixed amount can't grow overnight, so any new pool of buyers could shove prices up very fast. And in short, Ripple's court win didn't just lift a cloud off of XRP, it really switched on a runway light that Wall Street can see from miles away and start joining in. In the meantime, another proverbial jet is already revving up on the runway with Solana. Just weeks after asking for an XRP fund, $1.5 trillion giant Franklin Templeton filed to launch the first US spot Solana ETF. Its shares are set to trade on Cboe's BZX exchange and Coinbase guarding the coins. So BZX is the place that you can actually make the trades for this ETF. Coinbase is going to be the one holding the coins for them since they're obviously good at doing so. They hold it in cold storage, so it's nice and safe as well. The numbers and analytics on the blockchain are actually just as enticing as well. Solana has a stockpile of stablecoins that jumped over 150% this year, blowing past $13 billion and setting a brand new record. More digital dollars buzzing around means that more network traffic and more Solana burned in fees is going to be on the horizon. And just so you don't know, when Solana is burned in fees, that essentially means that the supply is going down, and that's good for price. Big brands like Visa are already testing that speed. Visa now sends live USDC payouts, USDC being a stablecoin, to merchant partners like WorldPay and Nuvi straight over Solana. They're praising its high speed blocks and very tiny costs. Basically, the transactions can go really fast and they're very low fees. Wall Street's box checkers are already lining up too. Put this all together, rising usage, heavyweight filings, basically big funds joining in, clean and fresh futures. And then Solana is really looking like it's primed for a headline grabbing ETF debut and maybe even, a bigger price blast. All this heat and hype around Solana and XRP isn't happening in a vacuum. Retail and Wall Street money is lining up all at the same time. In February, the SEC quietly dropped its lawsuit against Coinbase, which basically was signaling a softer stance and a move from lawsuits to very clear rulemaking when it comes to regulations. As you can see here on this article from Axios, they called it the SEC's retrenchment. And that is essentially just going over that the SEC is deciding to make different rulings and kind of have a different stance on crypto as a whole. And you can see right here, the basic point of this whole article is that the SEC spent the first 2 months under the new presidential administration basically trying to make it clear they're going to regulate and write rules and not just take a bunch of firms to court like Coinbase or Ripple. Investors have really caught on to this change very quickly. Analysts count 40 plus altcoin ETF filings this year. That means that they're getting proposed, they're not getting accepted by the SEC. But XRP now tops the list with 10 pending applications, while Solana has 5. We all see lots of different predictions when it comes to the chances of these things happening or not, but currently we're seeing, an XRP ETF having an 80+% chance of approval in 2025. When you add in big institutional names and Wall Street names like Grayscale, Franklin Templeton, Wisdom Tree, and Fidelity, each pitching their own funds, you get a perfect storm of adoption plus regulation. When the rule book turns friendly towards crypto and big giants are ready to buy, fresh capital can flow in very, very quickly, pushing prices and mainstream use much, much higher than ever, honestly. So with these ETFs on the horizon, what can we take from our historical knowledge of Bitcoin and Ethereum ETFs in the past? When the first Bitcoin futures ETF called BITO opened in 2021, it logged $1 billion of trades in just one day, one of the biggest ETF launches ever. Jump to 2024 spot funds, BlackRock's IBIT alone scooped up about $41 billion and is on a 19-day inflow streak. Altogether, US spot Bitcoin ETFs show roughly $40 billion in net inflows. Now, we can't just look at one particular coin or one particular instance, although there were a couple in Bitcoin. Ethereum also followed this pattern. Its first spot Ethereum ETF saw $1 billion in day one volume last July. Each of these launches pulled in tons of new investors. It tightened trading spreads and nudged the prices even higher. The lesson to learn here is when Wall Street gets an easy on-ramp, demand hits very, very fast. If Solana and XRP win the same green light, history says another money wave could be next. Now, the money wave in general is chasing more than hype. It's hunting, real world utility that sets Solana and XRP apart. Solana in general has so many uses, as many of you may already know. It's a very utility focused layer one chain that has, smart contracts and things like that. It also processes transactions very, very fast. Within, each block is within 400 milliseconds, and it can handle thousands of trades per second for less than a penny. With all of this capability, as we saw before, Visa's already settling live payments with USDC for a couple of its big, world processing payment entities. The Solana blockchain also has lots of stablecoins within its supply, as we discussed before, leaping 156% to $13 billion, which the main point here is that these stablecoins are, a fresh way to fuel applications like games and decentralized finance. Now, on the flip side, the XRP side, it's built to move money across borders internationally. Ripple's on-demand liquidity or availability of cash lets banks swap currencies in seconds, which is obviously something they do a lot. Using XRP as a bridge for this cuts down their costs a lot. Each transaction on the XRP ledger burns a tiny bit of XRP as well, meaning it just deletes XRP. This means that it's quietly shrinking the supply over time. And as we know, when there's a smaller supply and the same amount of demand, the price increases. So an ETF here isn't just buying scarcity, it's buying the rails of global payments. To put simply, Solana and XRP bring utility that investors can see, and utility is what turns ETF buzz into lasting demand, especially when you're getting new people putting money into at least the idea of these assets without necessarily buying them themselves. It drives the price up. And essentially, when it comes to large investors, Wall Street investors, they don't have a vehicle to be investing in XRP and Solana because they can only really go through the traditional markets, or at least they're only familiar with them. Either way, on certain flip sides, it could be one or the other. Certain investors could have restrictions based on where they come from, especially like big funds. They can't just be holding XRP or Solana Solana, so they have to go through ETFs in order to be investing in it. The demand is already there, but this is an avenue allowing the demand to flow into the market. So let's get into some price predictions. When investors spot real utility and, having a shiny new ETF, the first question is, how high can it go? Standard Chartered thinks XRP could climb to $12.50 within a few years, about a 6 times jump from today. If an ETF pulls billions of fresh cash into the token, that's what they're thinking it could go to. Some analysts think that it could get even spicier, arguing that if XRP ETFs capture just 15 to 30% of the Bitcoin ETF money stream, prices could tag to $22 down the road. On the Solana side, people that are watching the charts at Cointelegraph see a very tidy bull flag pattern pointing to $220 this cycle. We've obviously seen it go much higher than that very recently, but it dropped down to about $100 a month ago in April, where, obviously it's climbing back. Right now we're at about $175, but, all-time highs are within reach. Thanks to record high stablecoin activity and surging DeFi scene, this is probably what we're going to see. Honestly, I think that it would go much, much higher. From current levels at about $175, it's only about a 30% increase, but it doesn't count the extra squeeze if Franklin Templeton's ETF drains the open market of SOL. This prediction for SOL, while only about a 30% increase from current levels at about $175, doesn't count the extra supply squeeze if Franklin Templeton's ETF gets on the market and drains the supply, getting more Solana be bought up by all these ETF funds. Just remember, both assets have fixed supplies and big chunks are already locked away. So if demand from pensions and hedge funds shows up like it did for Bitcoin, the price ramp could be faster and steeper like many folks expect. So what's the big picture here? We've got real world technology that's advancing, lots of different use cases and utility for each of these chains, clear rules and regulations, and giant ETFs lining up to scoop up these coins. When Bitcoin ETFs sucked in $40 billion of fresh cash, prices popped up very fast. And analysts are saying that an XRP ETF could push the token towards $12.50. While Solana charts are pointing to $220, at least some analysts, I'm personally thinking that this could go much, much higher since we had a very recent all-time high, almost $300. Wall Street money coming in plus a fixed supply is a recipe for rocket fuel when it comes to looking for a moonshot. And if you're looking for a place to start, if you want to get involved and put some of these into your portfolio, I've included links to Coinbase and crypto.com where you can get $50 worth of free crypto just for signing up. Plus, if you're interested in meme coins, check out MoonShot. I'll leave a link to that where you can claim some free meme coins just for signing up with that link as well. If you learned something new and enjoyed this video, make sure to hit like and subscribe if you want to stay tuned for all things crypto. Thanks so much for watching. I'll catch you in the next one.